Hey everyone, welcome back to Corporate Decoder. We have a fascinating filing today from 22nd Century Group. Incorporated, it seems like they've been busy behind the scenes making some significant adjustments to their financial structure, and we're going to decode exactly what all of that means for you. Alright, so what we have here is a Form 8K filing. This is essentially a report that companies file to announce major events that shareholders should know about. Think of it like a company's urgent news bulletin. And this one has some pretty interesting details about how 22nd Century Group Incorporated is trying to navigate some tricky financial waters. The big news here is an agreement that happened on the 17th of December of last year concerning their series, a convertible preferred stock. This is a type of stock that can be converted into regular common stock, and it comes with a whole set of rules and agreements attached. Now, 22nd Century Group Incorporated is essentially saying they've entered into what they call an omnibus amendment and waiver. This sounds complicated, but at its heart it means they and the holders or the people who own this preferred stock have agreed to change some of the original terms of their deal. So what did they change? Several things. The first big one is they've pushed back a deadline, the stockholder approval. Deadline has been moved to the 23rd of February of 2026. This means they need their shareholders to approve certain actions by this new date. And what are these actions? Well, one critical item is a reverse stock split. They need shareholder approval for this to help them meet the listing rules on the Nasdaq Stock Exchange. Basically, to keep their stock trading on Nasdaq, they need to make some adjustments. They also need approval for a new offering of securities up to $20 million. This could include preferred stock and warrants similar to what they've already issued. This is a way for the company to raise more capital. They're also tweaking the rules around their ATM facility. This is an the market facility, which basically means they can sell shares of their stock directly into the market. Over time, they've put in a new rule that before getting shareholder approval, they can only sell shares at a price of at least $2. Per share. After getting that approval though, that restriction is lifted. And here is a key point: if they don't get that shareholder approval by the new deadline in February of 2026, they can't sell any more shares under this ATM facility. Until they do this, put some pressure on them to get that approval. Another significant change is the possibility of lowering the conversion price of the preferred stock. This means that if shareholders approve it, the preferred stock could be converted into common stock at a lower price. This could lead to more common stock being issued, potentially diluting existing shareholders. They're also introducing an alternative conversion feature. This is pretty interesting under this new option. The preferred stock can be converted at a price that is 85% of the volume-weighted average price over a specific period. This is designed to be more attractive for conversion under certain market conditions. On top of all this, they're also amending the terms of warrants. These are like options to buy stock in the future, and the company is agreeing to provide adjustments to protect warrant holders from future stock issuances. That could reduce the value of their warrants. So why is all of this important? It falls under a section about material modifications to the rights of security holders. Essentially, these changes directly impact what rights and potential benefits the holders of preferred stock and warrants have. They're modifying the rights associated with these securities. This is also being reflected in their official company documents, specifically an amendment to the certificate of designations for their series, a convertible preferred stock. This is the legal document that outlines all the details of that specific class of stock. And for those who want to dive into the nitty-gritty, the actual certificate of amendment is filed as Exhibit 3.1 to this report. The omnibus amendment and waiver itself, the main agreement we've been discussing, is filed as Exhibit 10.1. So let's break down what this all means for investors. It is a mixed bag. On one hand, the company is taking steps to meet Nasdaq listing requirements and potentially raise more capital. This could be positive if they use the funds wisely. However, these amendments, including the potential for a lower conversion price and adjustments to warrants, could lead to significant dilution for common stockholders. This means your existing shares might represent a smaller piece of the company than before the extended deadline for stockholder approval. Adds a layer of uncertainty. The company's ability to sell shares under their ATM facility is now directly tied to getting this approval. By not getting approval, the company faces restrictions on raising capital through this avenue. The move suggests 22nd Century Group Incorporated is in a phase of financial restructuring. The goal seems to be to secure their Nasdaq listing and potentially fuel future growth through new offerings. But the terms of these agreements show a delicate balance between the company's needs and the rights of its existing security holders. Looking at the bigger picture, 22nd Century Group operates in the cannabis industry, and like many in this space, they face regulatory hurdles and a constant need for capital. These amendments are strategic moves, likely aimed at navigating these challenges while also potentially setting the stage for future expansion or partnerships. In my opinion, these five reveal a company actively managing its financial structure to meet compliance and growth objectives. The risk of dilution for common shareholders is a key concern that investors should watch closely. The success of these plans will depend heavily on securing shareholder approval and the effectiveness of their future capital raising efforts. Alright, that is our breakdown of 20. Second Century Group Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.